Buying your first shares in Australia can feel intimidating. Brokers, fees, CHESS, US markets. It sounds like a different language. But by the end of this video, you'll understand exactly how it works and how to place your very first trade with confidence. Quick but important note, this video is general information and education only. It is not personal financial advice. It doesn't consider your individual goals or situation. Investing carries risk, including the risk of loss, so consider your circumstances and a licensed financial advisor before you invest. Let's start with the basics. A share is simply a small slice of ownership in a company. Buy one share of Commonwealth Bank and you own a tiny piece of that business. When the company does well, your shares can rise in value. Many established companies also pay you a slice of their profits called a dividend. When the company struggles, the value can fall. That's the risk you're taking on. In Australia, most people buy shares on the ASX, the Australian Securities Exchange. Think household names like Commonwealth Bank, BHP, Woolworths, and Telstra. Every company has a short code, CBA, BHP, that you use to find and trade it. You can also buy shares listed overseas, most popularly in the United States, home to companies like Apple, Microsoft, and Nvidia. Aussie investors love access to these global giants. But there are two differences to know. US shares trade in US dollars, so your Australian dollars get converted and there's usually a small currency fee. And US shares are typically held a little differently to Australian shares. Which brings us to one of the most important ideas for beginners. When you buy Australian shares, there are two ways your ownership can be recorded: CHESS-sponsored or custodial. This sounds technical, but it's genuinely worth understanding before you choose a broker. CHESS-sponsored means the ASX records you directly as the legal owner, under your own personal holder identification number, your HIN. The shares are in your name. You receive holding statements, and if you ever want to switch brokers, your shares can come with you. Custodial means the broker, or a custodian, holds the shares on your behalf in a pooled account. You still benefit as the owner, but you're not the registered legal holder. It's often cheaper and very common for US shares. But it can be harder to transfer your shares out and you're relying on the broker's records. Neither model is unsafe with a reputable licensed broker. But for beginners who want the clearest, most portable form of ownership, CHESS-sponsored is often the simpler peace-of-mind choice for Australian shares. A broker is the app or platform you use to buy and sell shares. Australia has a lot of choice in 2026, and they mainly differ on three things: the fee per trade, called brokerage, whether they're CHESS-sponsored or custodial, and which markets they give you access to. Let's walk through the popular options. Fees change often, so treat these as a guide and always check the current rates on the broker's website before you sign up. CommSec is the largest, owned by Commonwealth Bank. It's CHESS-sponsored, gives you full ASX and US access, and integrates neatly with CBA banking. The trade-off is that it's one of the more expensive options for small trades. If you're starting really small, CommSec Pocket lets you invest in a simple menu of ETFs from around $50. We'll explain ETFs shortly. They're a beginner-friendly way in. Stake and Superhero are popular modern apps with very low Australian brokerage and CHESS sponsorship on the ASX. Stake also offers US shares with no brokerage, though a currency fee applies, and US holdings are custodial. Perla is built for long-term investors, with auto-invest features that let you set and forget regular contributions. Great if you want to invest steadily without watching the market every day. Self-Wealth charges one flat fee no matter the trade size, which suits larger trades. CMC Invest offers free brokerage on smaller Australian trades under certain conditions. Both are CHESS-sponsored. Then there are global platforms like Interactive Brokers, Moomoo, Webull, and Tiger. These are low-cost and powerful, especially for US and global shares. But several use a custodial model and some are built more for active traders than total beginners. So which should you pick? If you want clear ownership of Australian shares and a simple experience, a CHESS-sponsored broker is a sensible starting point. If you're focused on cheap global trading and you're comfortable with custodial holding, the global platforms shine. There's no single best, only the best for you. Before you buy, 3 ideas will make you a smarter beginner. The first is diversification, a fancy word for not putting all your eggs in one basket. Spreading your money across many companies reduces the damage if any single one falls. The easiest way to diversify is the second idea, an ETF, or exchange-traded fund. Instead of buying one company, a single ETF can hold hundreds at once. Buy 1 unit of an Australian shares ETF and you instantly own a slice of the top 200 or 300 companies in one simple trade. Many beginners start with a broad ETF for instant diversification, then add individual companies later as they learn. Individual shares offer higher potential reward, but also more risk and more research. The third idea is dollar cost averaging. Rather than trying to time the market perfectly, you invest a fixed amount regularly, say every month. Sometimes prices are high, sometimes low, but over time it smooths out the bumps and removes the guesswork. Now the part you came for, actually buying a share. Here's the process from start to finish. It's simpler than most people expect. Step 1. Open and verify your account. You'll pick a broker, sign up, and confirm your identity with something like your driver's license or passport. This can take just minutes. Step 2. Add money. Most brokers let you transfer Australian dollars instantly using PayID or with a standard bank transfer into your trading account. Step 3. Find the share. Search for the company's ASX code, for example VAS for a popular Vanguard Australian Shares ETF or CBA for Commonwealth Bank. Step 4, and this is the one beginners ask about most, choose your order type. A market order buys immediately at the best available price. A limit order lets you set the maximum price you're willing to pay, and it only fills at that price or better. Market is fast. Limit gives you control. Step 5. Place the order. Enter how many shares or how many dollars you want to invest. Remember, for your very first trade in a company on the ASX, there's a minimum of around $500 worth. Review the brokerage fee and confirm. Step 6. Settlement. In Australia, trades settle 2 business days after you buy. That's called T+2. After that, you'll get a confirmation and, for CHESS-sponsored shares, a holding statement showing the shares are officially yours. And that's it. You're now a shareholder. The first trade is always the biggest step, and after that it becomes routine. A few final habits to set you up well. Start with an amount you're comfortable to leave invested for years, not weeks. Keep your fees low, because on small trades, they add up. Diversify. And invest regularly rather than trying to pick the perfect moment. Remember, this has been general information to help you understand how share investing works in Australia, not personal financial advice. A great free independent resource to learn more is the government's Money Smart website. And if you're unsure, a licensed financial advisor can help with your specific situation. If this helped make investing feel a little less intimidating, you're exactly who we made it for. Take your time, start small,